What I'm going to say to you today could be life-changing to your trading. I hope you stick around. Welcome to the Jim of All Trades channel. I'm Jim, and I'm a forex trader and a BTC and LTC trader. I trade on the crypto market, and I'm here to help you understand trading and to help you understand where Bitcoin and Litecoin are going today. Today we've got a huge topic for you that's going to help you. We're going to look at Bitcoin and Litecoin price. I'm going to tell you where I think it's going, and some price targets as well. But we want to look at in the process of that, we want to look at a couple of things. Number one, we want to look at structure. I want to teach you what structure is and how traders think, and how traders have been taught to think about structure when we talk about support and resistance and things of that nature. I want to talk about the market maker strategies that are designed to take your money based upon those structure areas, and then I want to tell you where I think Bitcoin and Litecoin are going, and then how to think about trading in this environment. So this is a crucial video. I hope you'll stick around to enjoy it. Just before we get started, I'm not a financial advisor. Just want to remind you of that. I am simply sharing with you how I think about the market. These are my opinions, the way I think, and this is the way I view the market. So if you have you need to do your own due diligence as you study the market and make your investment choices. Okay? All right, let's jump into the market. What you're looking at right now is the BTC and the BTC chart and the weekly on the weekly chart. Now, what I want to show you is that first of all, we need to think about price structure and how price acts around structure. What you'll notice is as we went up in the bull market, we had these definitive turning points, right? These areas where we have liquidity in the market. Liquidity is basically money moving back and forth between sellers and buyers quickly. Okay, those are what we call liquidity zones, and when you see these liquidity zones, those are places of structure. Those are price zones or liquidity zones for market makers to come back and hit, because that's an area where price reacted. Price reacted here because traders had thoughts about what price should be doing or not. They had sentiment about what the market should be doing. So when the sentiment is, hey, we better be selling, sellers start taking their profit, the price will start going down. But when the sentiment is, oh, price is going up, buyers come in and buy like crazy. And so that's the way the market moves. Okay, so what you need to do in your chart is start marking these liquidity zones. Okay, start marking the tops and the bottoms of these liquidity zones. What you'll find is that as price came up and hit this zone, it bounced off, and we marked these two little areas. It came back up, it broke through, and it came back to retest it. And this is what we call resistance as price is going up to it. And then this is what, when it comes back to it and bounces off of it, this is what we call support. Okay, so what used to be resistance, we say in trading, is now support. Okay, and this is just conventional TA. You'll see how price went all the way up here and came back down. And look what happened. It came back down on a place where there were two touches on this, and so it came back down to a support area, right? So you need to understand that. That may be nothing new to you, but that may be totally new for many people on my channel. So I hope you understand that. So what we're going to do is keep marking these liquidity zones. Okay, I just use a horizontal bar on my chart. Okay, here's a place where there were a lot of touches, and so you see that I marked that wick right there, and then this could be more like that wick, like that where it touches all these different points right here. So that's probably a better place to put that mark. Let me zoom in just a little bit, just to see if we can see it a little bit better. There we go. This whole area right here became kind of a congestion zone, and then we've got, then you can start marking, all these different channels there, and they become, you'll notice that here's a good one right here. See the bottom of this, where's the top of this? So you could see all the congestion in here. This is a huge liquidity zone, and that's a big deal, okay? Because when you see a liquidity zone, you know that the market makers are eyeballing that. They know that there's money to be made there. They know that if they can get price there, they can get a lot of buying and selling, okay? The way it works is that when price gets up here, it changes sentiment, okay? As price was coming down, the sentiment was bearish. Everybody's dying. Everybody's thinking price is going down, and everybody's freaking out, right? So sentiment is bear, is going down, right? Well, what happens is as they reach this liquidity zone, they bounce off of it, and everybody's still thinking, oh, it's going to keep going down to the $1,700, $1,500 level, because that's the next liquidity zone. That's the next area of support, right? And so if we break this, we're looking, to come down here to the $2,000 range, and everybody knows that. And this is what everybody's thinking. And so what the market makers will do, they'll begin pumping price, and they begin slowly pumping price, slowly pumping price, slowly. And right in this area, this is where they're getting all their buys. They're buying, 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 buying. Somebody said in a chat the other day that no, the market makers need to start accumulating. Let me tell you something. They are not accumulating right now. They are selling, or they're getting ready to sell big time. So what you need to understand is they accumulated all in here, and then price, boom. This was a short squeeze, and it shot price up like crazy. And so that's what we've got now. So now what's happened through this period of time, the sentiment has changed. Okay, the sentiment has changed from bear to bull. Everybody's thinking, oh, the price is going up, price is going up. But what we're reaching is this liquidity zone. Okay, price needs to correct. It needs to bounce off. Okay, it probably should have already corrected by now, but its price is being pumped. Why? Why is price being pumped? Because if we can keep pumping price through this area, it's going to increase the sentiment, so that bulls, or people thinking price is going up, and buyers are going to come in, and they need those buyers, because all the BTC that they collected down here, they are now going to sell to all the buyers right here. So price is being pumped. So they're willing to liquidate or spend a little bit of money to make a lot more money later. So they'll pump the price, pump the price, pump the price, slowly, carefully, with bots and algorithms. And then once price gets in here, what we're probably going to see, and this is what I think is going to happen, we've hit this first reaction zone. But generally what happens is when price comes up and hits that first target, that first liquidity zone, that first area of support and structure, there'll be a reaction off of it. And so what that'll do, that'll create a lot of people that thinking, oh, we're going down, we're going down. And then what that does is that when they start pushing price again, these traders that think they're going down, they get stuck in bad trades. Then so if they're selling here or shorting here, they end up having to close their shorts, okay, and which means buying. And so buying pushes that price up even more. All right, so that first reaction creates an area of indecision, where there are going to be buyers and sellers coming in. And so then after that first they're going to pump it a little bit more, and they're going to they're going to pump price probably pretty fast up into here. And my guess is that they're going to just pump this price up to this $6,200 range, maybe even to the $6,500. They're going to wick up to it really fast and create all this hysteria. And people are going to be buying up here, and they're going to be selling into those buys, and that price is just going to start tanking. And price is going to tank. Let's draw some structure here. Price is probably going to tank somewhere down to this region here. We do have another area of support. What you should expect, if I were to guess from an Elliott wave perspective, this is what you're going to see. We're going to see an ABC correction. So price is going to come up here. We're going to see an AB. We're going to see an A. We're going to see a B. And we're going to see a C, just like that. Okay, something to that effect. Okay, now that's if we are still bull and this isn't corrective, and that's a strong possibility. That's probably the case. We're probably looking at this area. Remember, let me show you some other areas of support here. Right there is another area. So this could come all the way down to test the bottom again, and ultimately in the Elliott wave perspective, this is just going to be a large 1, 2, which is beautiful, because then we have 3. So good news. You're getting ready to have a discount in price. Don't freak out. But you need to be aware that you're getting ready to have a discount in price. This is not the time to be buying. You're like, yeah, but as you watch price go up, you're going to be freaking out. Okay? Now, if you're day trading and you can scalp something, that's fine. I get that, but you need to know what you're doing in the process, right? You need to have you need to have stops that are clear. I day trade, and I had a trade the other day go bad on me, and so I had to stop that out because buying and trading in this little scalps are dangerous and risky. You got to take that risk when you trade. We understand that. So Okay, so this is what I think price is doing. You'll kind of notice what the market makers have done. They took price down really hard, and then they took price up really hard. And so everybody that was shorting, and price came up against them, and so they had to close those shorts and those buys. In closing those shorts helped bring price back up. So that's kind of how the market's moving. This is what I expect price to be doing. So in the short term, as we look at the chart, what I'm guessing is going to happen is we've got, and again, I'm just guessing what's happening because nobody knows. But I'm looking at it. We need to correct here, but I just think we're going to have another pump up in here. So we're probably making a four wave. This is probably creating a flat correction in here. So this is probably a four wave. What I'm guessing from an Elliott perspective, this is the final wave right here that's being made, and we're almost done with it. We got a one, two. This is the top of three. We're making four, and then we're going to come up here for five, and we're going to be done, and then it's coming down. All right, so that's what I'm thinking. So what I would be doing if I were you would not be trying to trade that unless you're an experienced trader. I'd be just waiting for this correction to take place. It's going to happen. You're going to wait it out. It's going to be months, okay? It's going to be, into June, May, into May, whatever. There's going to be this correction in May or June in that ballpark. I mean, who knows how fast they'll bring that price down. They may bring it back down really, really fast. And so we don't know what they're going to do. We have to watch. The market makers are banks. They're banks. They're people that have the money. They control the market. This market is manipulated. That isn't a conspiracy. That's just fact. They manipulate the market by the money that they have, and so it's not anything that they're doing wrong. It's just they know how traders think. They know how emotions are controlled by price going up and down. They know exactly what they're doing, and that's why all these up and down movements. That's the benefit of Elliott wave. You kind of can be prepared for those things. Okay, so yeah, I'm expecting a pump up in Litecoin. I'm expecting something like this. This is what I'm looking for. So we're probably going to finish this wave out, this B wave out, and come up. So this is actually probably just a big one wave. It could be yeah, this is probably a big one wave, and then this is this is making a two wave here, ABC, and then we're coming down for three. Or this is a big A wave, I should say. This is your B wave, and then we're going to come down for five waves of a C. So that's what we're looking at. I'm looking at probably a top of this correction if this plays out like I'm expecting. Let me throw the fibs on here for you. I'll give you a price target. Looking at the $87 mark to the $91 mark, retrace up there. That's a potential target there. All right, as prices played out today, we'll see what it's doing, and we'll bring another video tomorrow. Hope you guys have a fantastic Monday. Mondays aren't always the best. We got to get back to work. But that being said, happy trading to you. And hey, leave a like and a subscribe. Leave any questions you have. Hope this video has been helpful to you. All right, we'll talk to you later.